In today's episode, we are going to talk about short sales. What is a short sale? I am a homeowner and I'm going through a hardship. Can I do a short sale in my home? Let's see. Here are the most common questions that a homeowner asks me when I meet them to potentially do a short sale. Question number one, what is a short sale? This is when a property sells below the price that the owner owes to their lender or lenders. For example, the seller may have 1, 2, or 3 mortgages on their home. The total money owed on their mortgages is $400,000, and they sell their home for $375,000. Because the homeowner needs to sell their property for below to what is owed, they will need to be approved by the seller's lender. Question number 2. What does a short sales works? First, the realtor meets the homeowners to determine the sales price and all the details about the short sale. My recommendation would be to put it on the market slightly lower than the regular market price, so you can have a multiple offer situation potentially. Once an offer is accepted between the buyer and the seller, that offer gets submitted to the seller's lender short sales department to be processed. They will be approving or disapproving this offer by the seller's mortgage, and keep in mind that each lender will have a short sale department. And what I'm referring to that, if that owner, that seller, has 2 mortgages and they have one mortgage with bank X and the second mortgage with bank Y, they will have to go to each short sales department for each of those lenders, okay? So that's what I mean with that. Now, in addition, each lender will have assigned potentially 2 to 3 investors. They are usually located in different parts of the world, and they will all must come to an agreement for all the terms and conditions of the sale. And what this means is that each property will be going through the approval process through the short sale department, but that bank may have attached that property to 2, like I said, or 3 different investors. One can be in China, the other one in India, the other one in Africa, that they have interest on that property, and they will all have to come up with an agreement on the terms and conditions of the selling of that property. Now, question number 3. Who does the short sale and why a homeowner will do a short sale? Sometimes a homeowner is no longer able to continue making the payments of their mortgage because they are going through what is called a hardship. Therefore, if the homeowner stops the payment, their lender will start the foreclosure procedure. This will be the right time to start the short sale process, but not to wait that you have missed several or many payments. It is recommended to start immediately once the seller knows that it's no longer able to make these payments. The longer you wait, the closer that you could be to have your home to be foreclosed. A short sale is done when the homeowner owes to their mortgage more than what the current market value the property is. For example, the seller owes $300,000 and currently their property is only worth $275,000. This is what is called to be upside down. It also can be because of life habits, loss of income, divorce, transfer of a job, and the mortgage owed is below market value, etc. Question number 4. What is the approval process means? It is strongly recommended to hire a realtor with experience in short sales during this process. There are 2 sets of documentation that has to be presented to the seller's short sales department. The seller's documents that are required by their bank and a complete sales offer for that property. It is very important to put together all the seller's documentation first, even before the listing goes live to the market. If this is not done, this will create a major delay on this process. Therefore, the realtor will need to contact the seller's lenders to request the list of all the seller's documents that are required to process a short sale. For example, the lender may require a tax return from the last 2 to 3 years, and the sellers don't have it or cannot find it. Well, the seller will need to work on this before the property goes live into the market. You need to be prepared and well organized. Otherwise, this will be a cause of a major delay during the sale of that property. Question number 5. What happens if the bank denies the short sale? As soon as the homeowner stops making the payment, their lender will begin starting the foreclosure procedures. If the seller decides to do a short sale and notifies the lender during this process, the lender will suspend the foreclosure procedures to start the short sales process. If the short sales gets disapproved or disqualified by the lender, then the lender will continue with the foreclosure process. It is always recommended to do a short sale because with a short sale approved, more likely will help the homeowners to prevent having liabilities from their lender on potentially money that is owed to their bank at the end. Meaning, once the short sale gets approved, more likely the lender will not come after the homeowners if their financial changes in the near future. With the foreclosure, the homeowners may remain liable for money owed to their lender for the next few years potentially. For example, the homeowner lost their income, and after the foreclosure procedure gets done and over with, the homeowner finds a job that pays them well. The former lender may go after the homeowner's assets to request some or all the money owed. This will be to the seller's lender's discretion. Question number 6. Can the homeowner's lenders counter offer? The response is absolutely yes. For example, you have a sales contract for $200,000 and the seller's short sales department may counter this offer for $230,000. The buyer at this point will have 3 options. They can accept the counter and buy the property. The buyer can count the counter offer to the lender, or reject it altogether and cancel the offer. The good news on this part is that once that you obtain the approval or the counter offer, now you learn two things. Number one, that the short sales department is willing to sell the property during this process. And number two, how much money they are willing to sell this property for. From which time you will need to accept only offers that reflect that amount, nothing less. Otherwise, the short sale will not work out. Question number 7. Can I put my house on the market for a very low price? It is always recommended to put it slightly below the market, but not too low, because the short sales department will order what is called a BPO, which is broker price opinion. This is hired by the short sale department, and it is similar at having an appraisal done to that property. It is the same concept, so you can better understand it. The short sales department will sell their property to the current fair price market value and nothing less. On the other hand, if the buyer is buying the property, especially through financing, the buyer will order an appraisal at their cost, as they do on any normal sale. Question number 8. Who pays for a short sale negotiator, commission fees, closing costs, etc.? The short sales department will do this at closing. And sometimes, if you do hire a short sale negotiator, this will be paid by the buyer, potentially. I don't use a short sale negotiator as a realtor. I process all the short sales myself, but sometimes a realtor will hire one to assist them with this part of the process. Now, during the short sale, it will be the homeowner's responsibility to maintain the service, like the utilities, on during the entire transaction, so the buyer can do all the home inspections as well as their final walkthrough all the way through closing. But this can also be negotiated where the buyer will pay for the utilities due to the seller's hardship. Question number 9. How does a short sale affect the sellers during a short sale? Well, number 1, their credit score will be affected by a lot. Missing a mortgage payment will affect a loss of a FICO score. Also, the homeowners lenders will be on a driver's seat. At the end, they are the ones who will approve or disapprove the short sale. It's not the seller. Question number 10. Can a seller buy another property after the short sale their current property? The answer is yes. There are some rules and regulations on the waiting period for you to do that. For example, if you would like to purchase another home with an FHA loan, you may do this after 3 years from when the short sale was recorded to the county, not the closing date. Usually the recording of the deed occurs 2 weeks to 45 days after the closing date. So keep that in mind. But you definitely will be able to buy another property. It's definitely doable if you meet the criteria, of course, in regards to FICO score, income, job stability, etc., the same as you did before. I hope this short sale update was informative, and if I answered all the questions, but if you have any additional ones that I have not covered, please let me know and I will get you the answer. And if you are in need of Orlando Realtor, please contact me so I can assist you whether you are a buyer or a seller, local or international. I am Fernanda Smith, Realtor with Keller Williams. Until next time, thank you so much.